So as a lot of you guys know, my name is Christy Lee. I'm a tax attorney. I've got offices in Alaska, Hawaii, and Texas. And my firm is a tax boutique. We protect business owners from the IRS and the SBA. This is not legal advice. If you're not our client, we don't know your specific situation. All three of us, we're not giving any it's very specific advice. This is very specific to everybody. Like every single person, I give a different answer to. There's also the questions where you can ask us questions. We already know some of the people who've registered have questions. I already have them. We are going to talk about them. But before we get started, I would like to introduce Marc Enzi.
Thanks, Christy. Good afternoon, everyone. Well, good morning in Alaska, here in Texas, a little after 2. Marc Enzi, Tax Solutions, and we solve tax problems. We're a small boutique tax firm specializing in individuals, small businesses, and we have a lot of international clients. We do a lot of work with clients in offshore countries and people from outside the U.S. here in the U.S. on assignment. And of course, we also handle tax controversy. When there's a disagreement between you and the IRS on how much you owe or how much they can beat out of you, that's where we get involved. Marc Enzi, Tax Solutions. And next we have Miss Monica Reid.
Hi. Awesome. So I'm Monica Reid. I'm a CPA at Altman Routers & Company. My firm has 3 offices in the state of Alaska: Anchorage, Juneau, and Soldotna. I'm out of the Anchorage office and specialize in compliance audits over federal programs and financial reporting.
All right. Okay. So as a lot of you know, they sent out, it's called Final Interim Rule. I love that. There's an interim, it's not really final. And of course, in the final interim rules, the SBA stated that we will be issuing revisions to this interim final rules on loan forgiveness. I'm like, well, that's just great, because then there's more stuff. But as we have been discussing, the application for forgiveness revision is out, and it really does make a lot of things super clear. So I'm going to go through some of the questions that have been asked. The most important one, which I'm going to get to in just a second, which is the 8-week or the 24-week. But Monica, what is the new covered period under the PPP?
Yep. So if we have people who want to elect their 8-week period, they can still do that. But now they've increased it to 24 weeks after disbursement. And obviously the rule where you can push back your start date still applies.
Right. So it's like 8 or 24.
Yes.
And so Marc, like the biggest question.
You got your loan after June 5th, 2020.
You know what? Yep, you're right. So before June 5th, you've got the option. After June 5th, you're screwed. You got 24 weeks.
Yes.
Yep. Right. Okay. Yep. And then Marc, this is been the biggest discussion is, are you required? It's 8 weeks, right? You get 8 weeks or 24, but everybody's asking, well, I'm not going to have enough money for 24. Can I go early to the bank and say, I only want to do 10? A lot of people seem to be like 10, 11, 12 seems to be the right number. So what do you think? Can they file for that forgiveness before the end of the 24 weeks?
We don't know yet. Right now, we don't know. There's no clear guidance on, hey, can I get, all my money will be used up in, say, 10 weeks, because that's what it was based on, was 10 weeks. So if everything was correct according to your projections, then at about 10 weeks, you'll run out of money. Can I go apply then? And they haven't said. Now, Mnuchin did come out. Mnuchin is the Secretary of the Treasury, and he came out a couple days ago at a luncheon. It's not official guidance, but when they talk in public and give presentations, he indicated that we want to get this over with as quickly as possible, which sounds to me like once the money's used up, you're probably going to be able to apply for forgiveness. So there's probably going to be additional interim final regulations. But as of today, yeah, more final regulations. So change 27.
I love that they already revised the first interim final. They already amended the final interim rules. I'm like, well, good gosh, come on. I mean, that's just annoying. All right, so to me, this is what I think. I've talked to a lot of the banks, and the banks, I had one banker say, we don't care if there's an 8 and a 24 week. We don't care. We're just going to make you do 24 week. And I told my client, well, you're violating federal law, but let's just calm down. Let's just see. Let's give the guy a minute. Maybe he's a moron and he doesn't realize that there's the option. Because, some of these people, I got clients that are saying, I don't give a shit. I'm done. Like, I don't want to deal with this money anymore. I'm tired of trying to figure out. It's like a jumping rope. I don't know where this thing's going. So what should people consider? Monica, when you're looking at 8 weeks versus 24 weeks, what do you think businesses should consider on which one should I pick?
I would first look at how much money have you spent so far? And then based on that information, okay, do I care if it turns into a low, or do you want to optimize forgiveness? And also if you bump it up to the 24 weeks, you also have to look at the FTE count for a longer period of time. Whereas the 8 weeks, you're done with your 8 weeks and then you apply for forgiveness, you're done. But the 24, it drags it out. So really, I would look at those two things as your FTE count and how much money you've spent so far.
And I'm sure the people that are on this webinar, FTE is the full-time equivalent, right? So, Marc, what do you think? Anything you need to add to that? Oh, you're on mute for a second. I don't know why.
Sorry. Yeah, I did. That's my fault. Sorry. So Mnuchin, although he said informally, we want to get this over with as quickly as possible, I'm looking at what the regs say, and here's something to be aware of and be careful with, especially if you're one of those, hey, I can do it in 8 weeks or I can do it in 24. Know this, that you can't reduce the amount of average spend, right? You can't reduce your payroll by more than 25% on the spend side. So now you're going to be locked into that for 24 weeks. So if you're one of these businesses that's relatively stable, no problem. If you're one of the businesses that, you add staff as needed and you let them go as needed because you've got fluctuating or uneven income streams, just know that you're going to be locked in for 24 weeks. And if you look at the calendar, from today plus 24 weeks is December 31st. So it's not a small amount of time. I mean, it's the remainder of the year. So,
well, and keep in mind though, if you haven't applied yet, because there's people who have not applied. If you haven't applied, it's 24 weeks or the end of the year. So if you don't apply until say September, you don't get 24 weeks. You have to be done by the end of the year. And another thing. Go ahead, Monica.
Oh, someone just asked a question for the 8 weeks. Can we still use the 60% for payroll? And I say yes to that question. And yes, because that was the question. So I would say yes.
Yeah.
Yep, it applies to both.
Okay, so here is a really big kick in the face. This one really gets me mad. So with the application, which by the way, the application, they just made up a new thing on this forgiveness application. So the question that I'm getting, I got a question, if opting into the 24 weeks, how does it affect all the expenses? Like, for example, you've got that $100,000 cap and you look back at the wages. It was $15,385, $15,385, because you divide that would be 8 weeks of $100,000. So they want to know, well, hey, since it's 24 weeks now, can we now pay them $46,153, which would be the amount of money proportioned to pro rata, 24 weeks. Well, yes, if you're not an employee. I mean, if you're not an owner. So if you're an employee, then yes, you can pay up to that amount of money that you can pay every single week, the $46,153. But if you are an owner, you can only get $20,833. That's it. That is the pro rata. It's 2.5 months. So if you opt for 24 weeks and you're an owner, you get screwed. You can only get $20,833. If you do 8 weeks, then it's the same back to the $15,385. That to me is bullshit, because if I wasn't an owner, there would be no employees. But the other question is, what does the medical insurance look like? What do you guys think about that? I would say that even if you're an owner and you get capped, if you change the 24 week and you get capped at the $20,833, I think you can still pay their health insurance. You could still.
Yes, you can.
You guys okay with that one?
Yes, I agree.
Yep, you can.
Yep, and anyone who wants to see like the actual reference to what Christy's talking about, if you look at the updated loan forgiveness application, It's on page 3 and it's line 9. And
Hey,
it
Marc,
does
do you
say
wanna-
exactly what she just said.
Do you want to share your screen? We were looking at that before the call and just show them where that's at. I'm
What's
sure people
that? The new
Yeah,
application?
the application. Yeah, on that part that we were just talking about, the cap.
Yeah,
of
let
the
me see if I can
2008.
see if I can find it.
Yeah, I just want
So
people
the
to
other-
know that way,
the
you
other
know, people
question-
remember.
The other question associated with this is, what does the pension look like? And I'm going to say the pension, you can only match up to the 2.5 months. You can't match, like, once you're not paying them anymore through PPP, you can't match them anymore. Yeah, there we go.
Okay, so
It's right there.
So, like, that's the
It's on
easy,
page
though.
this is
two.
the new one. The important bit here is the 3508 easy.
Can you open the actual like full forgiveness?
Open the what?
Oh, actually, I think it's on the instructions form.
Well, yeah, the instructions
you
are
just-
built into the
Oh,
form.
it's right here. Okay.
Yeah, so
good.
page 2. It's a very short application. It's a 3-pager.
This
So
is the easy though. There's 2 applications out there, just so everybody knows.
yeah. So the short one here, and I've been through it, and this probably applies to 90% of my clients. The ones who it doesn't apply to are the ones who are skewing outside of the norms, where you're going to wind up having to pay money back. So this easy is pretty much for people who are going to wind up scoring 100% forgiveness. And again, I can't state this strongly enough. For your employees, you can keep spending money over the 24 weeks, but if you're an employer or you're a 2% or you're an owner in the entity, you're limited to 10 weeks of 29 income. Make sure that if the light bulb hasn't gone off yet, if you're an owner, listen up, pay attention. If you're an owner, you can't spend on yourself more than 10 weeks of 2019 income. Okay, so you can pay your employees for, say, 10, 12, 14, up to 24 weeks, fine, but don't spend more than 10 weeks of 2019 on yourself, because that money won't be forgivable. I don't know if that was
Right, and
clear or not.
what I love about this is, you can get off that
I'm
screen.
going to
if you
put
don't
it
mind.
back, yeah. Yep,
Yeah,
coming back to you.
If you can, but that's nowhere. I mean, that's absolutely nowhere. Meaning, there's no regs. There's nothing that allows that at all. So I'm like, all right. Next question, and I'm liking this one though. This was a good one. The exemption based on employee availability. So there's this safe harbor out there that say you've tried everything that you absolutely possibly can to hire people. You've got ads out there. What is that safe harbor? You want to talk about that, Monica?
So the new safe harbor, is that the one that you're talking about?
Right.
Okay, so the new safe harbor is basically if you have the inability to rehire individuals who were employees of the eligible recipient on 2/15/2020, and you have to show the inability to rehire similar qualified employees for unfilled positions. And then, oh, actually, this one is based on, I'm sorry, I need to reverse. This is, what I'm just going over is the type of documentation you need. They did clarify that. But if you are unable to rehire, run your business as normal, if you have restrictions related to COVID, so basically any requirements established by the Secretary of Health and Human Services, Director of Centers of Disease Control, and OSHA, beginning 3/1/2020 to 12/31/2020, then you have a safe harbor provision that protects you from having to get your FTE count back up. So they've added that with the reform. Those are the
Well,
two.
and then I just got notification from my staff that right now, as we're talking, they just put out more interim rules.
Yes.
And they say remember what I just said that I thought was bullshit, that they were capping it at 2.5 months for owners? Well, the interim rules now say that it can be capped at 2.5 months. It just came out like right now on this webinar.
Yep.
Kind of a little bit irritating. All right, we've got more questions. So the payroll, and I'm going to bring this up how much payroll cost needs to be incurred on the loan. You know, we got the 60 and the 40, right? So 60% of your loan has to absolutely be used for total forgiveness. So we put this little chart up. Let me share this with you. And Monica, I know you're going to talk about this one. So here is, explain that 60% of full forgiveness.
Okay, so if you don't spend 60% of your actual loan, so let's say you have a $100,000 loan and you spend, in this example, we put $54,000. Now, what I'm telling people is to make it your life easy, just use this formula that we have right there in the middle. It says A over 60% equals total forgivable amount. We're saying A is the total payroll cost you incurred during your covered period. So in the example again, so 54,000 divided by 60 equals $90,000 forgivable. So this is the formula I want everyone to use when you did not spend 60% of your loan on payroll.
Yeah, so there's going to be that limit.
Yes.
So, Mark, how long does a business have, like when you finally are able to apply for, like after the 24 weeks, how long do you have in order to apply for your forgiveness?
My understanding is now that it's been increased from 2 months to 10 months, which is going to create a timing issue with the year in which you spend the loan and then the year in which it's forgiven. And if there's any accountants on, just think cash basis and timing. So this could be an issue. But do you want to talk about that now, Christy? Or?
Yeah, you know, I do, because think about it this way. If my loan isn't forgiven this year, which, you know, if I have to wait 24 weeks, if I choose the 24 weeks, right, then what that means is all those deductions that they're allowable because this is a loan that I potentially have to repay. So on my 2020 tax return, I would be saying all of this money that I got is not income and all the deductions are deductible. So I would put them on my return. And then if I wanted to wait until October of 2021, which the extension for me to even file a return has already passed, so I've already filed my return. So in October 2021, I apply for forgiveness. The bank has 2 months to get back to me, but the law states it's not income. So even if it was, you know, ends up being a loan, it's still not income to me. It's a loan that I'm repaying. What do you guys think about that? That's like a double whammy. I love that one.
Yeah.
Monica, what do you think?
I mean, I agree with you. I do think that there are going to be some changes coming down the line, but as of now, that's how I would treat it as well. And yeah, for a lot of people, it is going to become a loan, especially since I know a lot of my clients are going to extend this. And then, you know, your loan is forgiven upon receipt from the SBA. So the SBA will notify your bank that you're forgiven. And until you get that notice, you can't say it's income. It's a loan.
Right. And even if it is forgiven, Mark, correct me if I'm wrong, it states it's not income. I mean, they've been very clear. And I know the IRS, we all know the IRS is going to come out with another notice. I have no doubt they're going to come out with another notice. But what the IRS says isn't law. And
That's right.
Law trumps the IRS's stupid notice. They're going to have to, I'm telling you, they will have to put it actually in a statute that says, because I can beat the IRS any day on their IRS notice. Their IRS notice doesn't mean.
Yeah, so what the IRS did is when they saw this initially, this is probably back in April, IRS was on this pretty quick. And they came out and they said, okay, yeah, we see where the CARES Act said that it's clearly not taxable income. So fine, we're not going to tax you on the income side, but we've got precedent that says you're not allowed to take a deduction for something that was not an expense to you. So even though you spent the money, if it's forgiven money that you didn't earn, that wasn't taxed, then it's not deductible expense. Okay, fine. Well, for all you accountants out there, and if you're not an accountant, you should pay attention to this anyway. When you put this on your books, right, when you got this money, hopefully you put it in a separate account, you should book this as a long-term liability because your repayment period's at least 2 years, and now it's been bumped up to 5 if you're an after June 5th spend. So if you got this loan and it's after June 5th, right, you're automatically in the 5-year spend period. So you've got a long-term liability. So if it's a long-term liability and you spend money that's, say, a loan, that's absolutely deductible because you don't know if it's going to be forgiven or not. We think it will be. You're hoping it will be. You're planning that it will be, but it might not be, especially if you didn't spend it right or if you didn't qualify for it in the beginning. So don't go not taking the deduction just because you're betting the farm that you're going to get the forgiveness, because you might not until you actually get the forgiveness. So point being, and I made a misstatement earlier, it's not 24 weeks from today is not December 31st. It's going to be December 4th. But if you got 10 months and you're probably not going to get your forgiveness application together until after December the 4th. So you spent the money in 2020, it's deductible in 2020, and now you get a forgiveness in 2021. Law clearly says that's not taxable income. So is the IRS going to try to make some reg change? Well, like Christy was saying, the IRS doesn't write law, so it'd be interesting to see how this one plays out. Yeah, we'll see how this one plays out.
Yeah. So I mean, that's what I would do. And you know, it's going to another, that flows right into the next question about the loans. Like if I don't get my loan forgiven, you know, what are the terms of my loan? Well, I'll tell you this, if it's before, and you already said this, before, if it's after June 5th, you got 5 years. And I'm telling you right now, all the banks are telling me, no way. I mean, we're not going to saddle up a potential 1% that we're going to get on an interest on a loan for 5 years. No bank wants to do that. Also, the banks are telling me, because if it was before June 5th, you can do 2 years. It is 2 years. However, if you and your lender agree to make it 5, you can make it 5. Those lenders aren't going to make it 5. They're going to be like, no. I mean, unless you are like a super awesome customer and they're doing a personal favor for you. What are your thoughts on that, Monica?
Yeah, I agree with that. And then also I want to add to that with one of the SOPs that came out, it said that the banks are no longer indemnified. So that even makes, you know, there's less incentive for them to give you a loan for PPP. So anyone who is still trying to get a loan, really reach out to us and we might be able to help you do some legwork and find a bank that will give you a loan. But right now, I mean, it's going to be tough.
Yeah, I've talked to bankers about that. I love how they said, it's actually written, you are indemnified. That's what it said in the very beginning. Banks are indemnified. So the banks relied on that. And if you're a lawyer, you know, they relied on that. And then they came out later and said, you know what? We're going to come after you. If you've done it wrong, bank, then we're going to come after you and we're going to call back any fees that you've received. And it's like, you can't do that. I mean, the banks are going to be like, yeah, there's going to be a law. I'm telling you that some bank's going to sue the SBA saying, I wouldn't have done these stupid loans. I do know bankers have told me they would have done them, but not as many as they would have done. I mean, they were pumping them out just to get people money. So let's go on because we got questions. So Monica, can you just tell everybody what can you spend your PPP money on? Like, okay, what can you actually spend it on?
So you can spend it on payroll costs, as we discussed earlier, costs related to continuation of group health benefits, you know, any healthcare benefits during periods of sick, medical, family leave, insurance premiums. This is all related to medical. Group health, very important. Not just one person, has to be a group. Mortgage and interest payments, but not principal. Rent payments, utility payments, interest on any other debt obligations that were incurred before February 15, 2020. Also, we'll come back to this one because this is what's eligible for the loan. And then refinancing for SBA EIDL between January 31st, 2020 and April 3rd, 2020. If you receive SBA EIDL from January 31st, 2020 through April 3rd, 2020, you can apply for PPP. Okay, so that's just basically straight from the guidance right there. Also, what happens if you spend something other than what is listed above? And it looks like Marc is going to answer that question on what happens if you spend on anything other than what is listed above. On our listed that I just listed off for what you can spend on your loan.
Okay, so we've got, you got 3 categories of things that you can spend money on, right? You can spend money on expenses that are forgivable. You can spend money on things that are allowable, and you can spend money on things that are not allowable, right? So you absolutely want to avoid the unallowable ones. Why do you want to avoid the unallowable? Because I don't want to be overly dramatic here, but there's some genius. Well, there's some genius out there. I think he was a ball player or rapper or music artist. I don't know what he did, but he invented a trucking company, and then he went out and bought a bunch of cars, right? Clearly unallowable, and that lad is probably going to be spending a little bit of time in the big house on the inside looking out. So now let's move on to the allowable but not forgivable. It means just that. If you spend money on something that's allowable, then such as, here's a clear example, allowable, right? Interest spent on secured debt, like mortgage interest that's secured by real property, deductible, allowable, forgivable. Interest spent on unsecured debt, like if you've got a business loan that's not secured by other assets, right? It's unsecured debt. It's allowable expense, but it's not forgivable. So you'd want to make sure that instead of spending that money, you spend that money on payroll, which is forgivable. So does that make sense? So although allowable, may not necessarily be forgivable. So this is one where if you're not an accountant, you're not an expert, you got a team of 3 people right here, you might want to reach out and hire someone who can help you navigate this before you go and spend the wrong money, and then you find yourself with a 2-year or a 5-year loan on your hands that you're going to have to pay all that money back.
And they say that if you, I mean, they just came out again, and like they love to throw the word fraud out. They said if you spend it on anything else besides that. So I'm saying even after your 8 weeks is gone or your 24 weeks is gone, and you want to keep some of that money, you can still only use it on those things we've been talking about that's allowable. And you can't spend on anything else. And they say, if you do, you have to pay it back, and we may prosecute you for fraud. Now, I mean, if someone makes an honest mistake, I mean, it's not a big deal. But if you got a moron, like a baseball player, and they're doing dumb stuff, well, you know, they're going to be, again, the Lori Loughlin of the PPP, and they're going to go to jail because they're going to want to tell people, hey, we weren't kidding. All right, so let's go on to some more questions. Here's one. Employees' earnings have always been commission-based for 2018, 2019. Year to date, it's under $100,000. We used PPP money during 8 weeks based on a maximum of $100,000 for 2020. Now that PPP money is used up, does the employee total 2020 year to date need to be under $100,000? I think I understand the question. It doesn't have to be under $100,000. I mean, it can. You only have to use the money for the 8 weeks. You can do whatever you want to afterwards. You don't have to do anything else. Just make sure that you're using the 8-week period. Are you guys in agreement with that?
Yep.
Yeah, so, and I guess I am, so are they doing $100,000 a year annualized?
I would guess
just make sure it's annualized if that's, make sure that it's annualized. That's the only comment I would make.
Okay. And then the next question, I think from the same person, with the 24-week period, if I'm able to sooner apply for forgiveness, what is the date for my number of FTE employees determined? Well, that is a good one because
that's 12/31.
December 31st. I say
that's why I think you can't do this forgiveness application early, because how can you do the forgiveness application early if 12/31 hasn't happened yet?
But is that like the safe harbor? Like what I'm trying to say is, say that you do 10 weeks and a bank's going to allow you to do, well, I think that's just, wouldn't that just be like maybe that safe harbor?
So
Meaning,
I think, hold on, I think for the date for the FTE count, based on the HR 7010, the PPP Flex Act, I read that it was the earlier of 24 weeks after disbursement, or, and then December 31st. So I think December 31st, if you got your loan, so really it's 6 months or the December 31st, whichever's earlier.
Okay.
It really depends on what you get a loan. Although I don't think I saw the SOP clarifying that, so that's a little bit.
And just for the people that are watching, this isn't like super clean like we normally would be, because we just got this stuff this morning. I mean,
this morning.
We had our questions and we were ready to go, and we've already received questions, but all of our, a lot of our analysis has changed. So I just want everybody to know it's usually we're a little bit more cleaner than that.
Yeah.
But okay. So
they just, again, as we were just talking, they released a new SOP. So we're trying to stay up to date. We're reading things off because as you know, everything is brand new.
Right.
And the reason this is so urgent, right, for everybody out there is like, why you're wondering like, well, why the heck don't they wait a month and then come out once they got all their stuff together and figured out? Because we're in the middle of the spend period, and you all
Yeah.
need to rely on this. So if you spend it the wrong way, you can get to the end of the period and figure out like, oh shoot, I screwed it
Yeah.
up, and now I got to pay all this money back. So this is why this is so urgent, because do it wrong and you got yourself a loan.
Right.
So
Okay,
you
so
know,
here's a comment from one of the people attending. They said Cabbage is still giving PPP loans. Wouldn't recommend them for much else, but they're still giving them. So that's one, if you guys are out there and you want to get a loan. Also, I would go to your own bank. You know, your own bank might be able to do it. Right, here's some more questions.
what Christy
yeah,
just
we have
said, let me
another
just jump in there real quick. So what Christy just said is really important. Know this, your loan has to be approved by 6:30. If it's not, the ship has sailed, forget about it. So if you're one of those who has not applied yet, don't wait till tomorrow, apply today. There's 146 billion left, all right? And last week they spent 900 million. So that's just short of $1 billion. Well, just short of $1 billion, you can probably burn that money up in about 2 days. So there's money left, get on it, don't wait till tomorrow, start today if you haven't applied yet. And 6:30, it's over.
And then there's another question. Do we have to negotiate the change from 8 weeks to 24 weeks with the lender? Can they deny it? So,
No.
I mean, Christy mentioned earlier that a bank is denying the 8 weeks, but yeah, based on the guidance, so if you got your loan before June 5th, then you can elect for the 8 weeks. 24 weeks is basically automatic unless you elect. Now, if it's after June 5th, you cannot elect for 8 weeks. It is 24.
It's in the statute. They're violating federal law. So no, I don't think they can deny it. I just tell them, no, it's in the statute and I'm allowed to elect you.
Yeah.
No.
And then the one thing the banks can deny though, is if you got your loan before June 5th, 2020, they can deny you to increase your maturity date for your loan to 5 years. They can say, nope, we're staying at 2 years.
Yeah. What do you got, Mark?
Just so you all know, there's a bunch of questions have come in. I've got 8 of them so far, and I've been answering them along the line. So if you want to, just look down in the chat box and see what the questions
I only
are.
see 3.
I only see 3 too. Oh, I think he's already answered them. Good grief, Mark. See, yeah, you are like.
I'm not trying to hog them all for myself. I mean, you can look at the answer.
No.
If I got it wrong, you guys can throw rocks at me.
No.
Just click on show all and there's your answer.
Yeah, the chat. Okay, so another question. Can I prepay rent under the 8 weeks with the new 60% threshold? No, don't do it.
Wait, hold on. What do they mean? Because they had that rule where you can basically, oh yeah, prepaid rent, if it's 8 weeks, no, but what you can do is if, for example, your loan period, let's say for June, let's just, as an example, today is the last day of your covered period. So, but then you don't get your statement until the end of the month. You can take from June 1st to June 17th, you can actually include those expenses, but it's not really a prepaid. That's not a prepaid expense under accounting terms. That's an actual expense incurred. The weird thing is though, is if, let's say, you know, you got your loan and you got, let's say you got your April and May bill in May, and you didn't have money because you guys had cash flow issues. You can actually pay for your April and May bill on like a cash basis and then incur that 17 days of June if that was your covered period. So that's something to keep on. You can't do a prepaid expense, but you can do cash basis with a little bit of accrual accounting at the end.
Right. Well, there's one question that I really like, and Mark answered it, but it says, if you stay with the 8 weeks, do you have to use the 75-25? And the answer is no, you do not have to. That's a good question. It is absolutely 60-40. So I like that one. If you want to switch from 8 weeks to 24 weeks, do we have to modify something through our bank? Nope, it's automatic. Yeah, good answer. Do you have to negotiate the change from 8 weeks to 24 weeks with the lender? Oh, okay, yeah, that was over there. Is owner employee apply to C corporations? No. Yes. Good answer, Mark. And I just received an update of company information from the SBA EIDL for $10,000. Do I need to take this original funds that wouldn't need to be paid back?
Oh, is that the advance?
Yeah, so Mark answered that correctly, and that's true. That if you received that $10,000 of the advance, and Mark answered it perfectly, it's no longer a grant. Like, they're going to make you repay it if your PPP gets forgiven. If your PPP doesn't get forgiven, then it doesn't matter. And then another question, what of these changes require us to work with the bank and what are automatic? Oh, that's a really good one. That is, yeah. So anything, work with the bank. If, just like what Monica said, if you want to extend your loan, if you ask for the loan, receive the money before June 5th, then you can ask for them to extend your loan from 2 years to 5 years. Of course, hopefully you're going to get it forgiven. And then, and Monica, I think you're right. You did state that, or Mark, can you guys answer this? I think it does state that it is 24 weeks unless you tick a box like on that application saying, I'm electing the 8 weeks, right?
Yes.
Okay. Did you see that, Mark? I think you're still on, you muted
Oh,
yourself.
No,
yeah.
I did not see any box where you tick 8 weeks because 24 weeks just happened. Is there a box that you're saying for forgiveness or for?
No, yeah, for the forgiveness application.
Well, it's not a check the box, but it looks like they have a covered period. Oh, sorry. I have the application in front of me and it basically has a covered period that you're using.
Okay.
So it's not a tick the box it looks like, but basically it gives you the option. And you know, if you guys have listened to our webinar, you know that only people who get the loan before June 5th can get the 8-week option.
You know, and another question, which can we apply for more funding through the PPP? I had heard rumblings that they were going to let you reapply for more money, but that new regs that just came out, it specifically stated, I mean, like, even on the application, it's like, if you have a PPP loan, you cannot get a second one. Like, you can only get one.
Yeah.
So I'm thinking they're gonna steadfast with not wanting to do the forgiveness anymore. There's a lot of EIDL money out there. I know in Alaska, there is a lot of money out there as well. And of course, they said, hey, well, if you got federal money, even $1, you can't get state money, which I think is kind of crummy because they didn't know that in the beginning. I mean, I know one person who got like a $2,000 PPP money and technically could have received like $20,000 to the state. And the state is saying, nope, you got the federal, even if you pay it back. Like, she's like, I'll pay it back. You don't just give back the money right now. I don't even care. They're like, nope, you can't get it. Oh my God, you guys suck. So, sorry. Let's see, any more questions? Oh, yes. Can you address the pension question again? Yes. The pension question. So for the 2.5 months for the owners, right? So if you're an owner, then you can only get basically 10 weeks of pay. So you can get a pension that your company makes a contribution to, like the company, for the 10 weeks. That's it. But if you have employees, you can keep doing it until the money's gone. Like, you can just keep on doing it, even if it's $100,000, you know, the pro rata, keep doing it. But the health insurance, we all agree, that's completely separate, and you can pay for that owner's employees' health insurance for the whole 24 weeks. Are we all in agreement on that one?
Yes.
Yeah. Okay. So another question, if we have met the 60% threshold for full forgiveness by 9 or 10 weeks from the funding date, can we then apply for forgiveness? Yeah, we've talked about that. It's going to be up to your bank. You know, so essentially, if we exceed the 8-week period but don't need or want the full 24, can we opt for 9 or 10 weeks? I think we all agree, no. It's 8 or 24.
8 or 24.
And maybe maybe the bank, but I'm telling you, like you've already discussed, Monica, the banks are really pissed, mad, upset that now they can be on the hook. So this forgiveness is going to be, like, they're going to make it tough on us because they don't want to get a clawback. You know, they don't want to get in trouble. They want their funding. They got a percentage. You know, they get a percentage for giving that loan out. You agree, Mark?
I agree.
Okay. So I think all of the questions have been answered.
Can we touch on
Anybody got
FTE real quick, how to calculate that? I just want to, Mark, we talked about it yesterday, and I just want to go over that real quickly. That way, you know, our clients are doing that count, because that is on the new application again.
Yeah.
We should definitely go over that.
Okay, feel free. I mean, you can
Oh,
go
do you
over
want
it.
me to, or Mark, I know Mark, you had like an awesome spreadsheet, and if you could, like what I saw, you know, with this, there's two, or actually three options, but really only two unless you're seasonal. And let me get to it. Eligible.
Right. Well, while Monica's looking that up, let me just clarify something, because I've gotten this question an awful lot. And let me just declutter or deconfuse this thing. Monica, you go ahead, jump in whenever you're ready. So everybody out there, don't get so confused by this whole thing. The PPP is just a loan that's designed to loan you 10 weeks of your payroll plus a couple other expenses like rent and utilities. And that's it, right? So we were having a hard time squeezing a square peg into a round hole because everyone wanted to spend all that money. They only gave us 8 weeks to spend it. Why they did this, I don't know. It's our Congress, right? Why did they do anything? They aggravate the heck out of me. They could have just made this easy. 10 weeks, you got 10 weeks to spend it. Boom, done, easy. No second law. But because it's Congress, we're going to make it difficult. So here's where we're at. You got 10 weeks of money if you got a PPP. Well, now you have up to 24 weeks to spend it, right? So there you go. So don't go spending the money on marginal stuff that might or might not get deducted. Just make your life easy. Spend it on clear black and white stuff like payroll, like rent, like utilities. And that's it, gang. And then the money that you're not spending on that stuff, use it out of your operating account and spend that on the other stuff that's marginal. Make your life easy. Don't make it difficult. But if you did, call us. We can help. Where are you at, Monica? You ready?
Yes. So what I read was that, you know, you need to look at each week and each employee, and how it works is full-time FTE, one FTE is 40 hours. You know, in the state of Alaska, you guys can correct me if I'm wrong, it's around 37 hours. And so for this, it is 40 hours. And there's two different ways to calculate it. So you'll look at each week, all your employees. You'll take whatever number of hours. This is the complex method. You can divide, you know, the week's hours by 40. And, you know, if it's less than 40, then you're going to get a ratio. But you can do the simplified method. So anyone under 40 hours is going to be 0.5 FTE. Now, the frustrating part to me is that you have to look at every week. At least that's what their instructions are. There might be ways to simplify this. And what I've been, you know, the moral of the story is to stay consistent with your count. If you're going to do it bi-weekly and divide it by 80 or whatever, just make sure that you're staying very consistent with your calculation and not changing it when you're comparing your, you know, pre-COVID numbers FTE count to your current covered period FTE counts. So the rules are the same as far as what your previous FTE count was, and that's, you need to look at either that between February 15th, 2019 and June 30th, 2019, or January 1st, 2020 and February 29th, 2020. And so you'll take an FTE count per employee, take an average, and just for any of my seasonal clients that are on here, the rule for them is going to be they can take 12 weeks between March 1st, 2019 and September 15th, 2019, if they would like. So, and then when you do your current period, it's your covered period. So if you're 8 weeks, then you need to take your FTE count for that, or your FTE count for the 24 weeks, depending on which method you're under. And that's just really important. It's going to be very time consuming. So I would do the prior, so your pre-COVID counts today or as soon as possible if you haven't already, because this is going to be very time consuming, especially for, you know, clients that have, you know, more than one location. You know, that's one of my concerns with this FTE count. And stay on top of it. during your covered period, like every time you run payroll, have your payroll technician or somebody else do your FTE count.
Yeah, just have all that ready, because they haven't even said what they want. I mean, on the application for forgiveness, it says, you're ticking a box that you say, oh, I have given all the documentation that I need to give to the bank. So it's going to be one of those fun things that they're going to be asking for stuff that nobody is prepared. And I believe they're also not going to be doing it paper. They're going to want you to log in online and download stuff for them, which is a bit frustrating because I like paper.
Yeah, I will say it looks like, so I would start pulling documents for the FTE count. It looks like and we don't know, like, how do you prove the FTE count? I honestly, I've looked at some of these 941s and I don't see how you can necessarily prove, 40 hours versus less, but basically I would make sure that you have your 941s ready, your state quarterly, business and individual employee wage reporting and unemployment insurance tax filings ready, because that is what is on the application as of right now. And I'm sure the banks are just going to be basically looking at this application and seeing anything where it says you need this or that, and they're just going to put it on their checklist, and the checklist is going to be long.
Yeah. Okay, let's, hey, Mark, would you answer this question? When I applied for the PPP, I started with 31. Does all my staff have to be full-time employees? Nope.
Well, it depends. If they meet safe harbor, no. But if they don't meet safe harbor, and what I tell my staff is, don't guess, don't estimate. You just got to run the numbers. It's so friggin' complicated, and there's so many different testing dates. I made a spreadsheet with. It's not a complicated spreadsheet. It's just a lot of data crunching. But you're going to have to. What we did is we did it on a granular level by day. So you just make a spreadsheet with. I suppose I could share my screen for just a minute to show people. But you just make a spreadsheet with your days on the calendar. Start with January 1st and pull it on down all the way through June 30th or further, and then make columns for each employee, and then put in there how many hours each person worked per day. And then on a 40-hour week, so per 7-day period, anybody coming in at less than 40 hours is going to be a percentage of 1. And so,
we're not trying to make this like super boring or like, oh my God, this is awful. We're not doing it to scare anybody. It sucks. I'm just telling you. I mean, it sucks. It's hard to explain.
And as we know, the SBA does like to scare people. I mean, you remember, I mean, a lot of my clients on here and your guys' clients know that there was a time where, everyone was afraid, did I certify in good faith that I needed this loan?
Yes, they said you were going to go to jail.
The SBA are, they're definitely trying to scare people, even with, we talked about it earlier with, if you don't spend your money on these items, allowable costs is what I call it in my world, then you're going to be prosecuted for fraud. It does say that. And in the beginning I thought, okay, they're going to be easy, but I think they are going to be looking at these things pretty thoroughly. So just make sure you are staying in compliance.
Right. Okay, Mark, another question. Our CPA put the FTE on our original application as 6 employees, but actually the one person only works basically 35 hours. So it's really like 5.875. So
the counts on those applications though were garbage. That's
yeah.
I think that's what they're asking. So those numbers are not even the same as what this forgiveness application, and that's why I think this forgiveness application is very clear about what periods you need to be looking at. Because when we got the initial loan application, we didn't know what, we knew it was for 2019, but how do you calculate that number? They had no guidance. So, we kind of did our best, stayed conservative because we didn't know, there was a lot of uncertainty. I wouldn't worry about that number.
Okay.
Here's what I would do. You need to be aware of what the different testing periods are. When I say testing, those are the evaluation periods when you determine your FTE number. And there's several different methods for calculating FTE. So don't let your eyes glaze over. Either you figure it out or hire somebody who can figure it out for you. And that would be my advice. And yes, the application is how you got the money. That's what you qualified for. Now on the forgiveness, you're going to have to prove up what your FTE was during the different qualification periods? And then what is it as of 12/31, your
Yep.
FTE? And so I'm not telling anyone to game the system, but if you were, say, a seasonal employer or you staff up over the holidays, it's your 12/31 head count that if you've got a problem with FTE, that's the period that you'd want to be staffed up for. And
Yeah.
I'm not saying that you want to game the system and hire people December 25th and let them all go on January 5th, but if you did
You
that,
can.
you would probably hit the FTE number if you needed to.
Yeah.
But the one thing I would actually, you know what, with the new Reform Act, I would definitely, you know, talk to us about the other new safe harbor that talks about, you know, guidance relating to security of health and human services, directors, Centers for Disease Control and Prevention, and OSHA, because, you know, with some of my clients that have the cruise ships who stopped running, I mean, that's something to consider. I mean, I don't know all the details of why those cruise ships aren't running, but I'm sure it's related to COVID. And, you know, and there's also some other safe harbor that we could look into for you to see, you know, maybe you can get your FTE count because you're seasonal, you run during the summer. With COVID, you can't get back to the levels that you were at before. So, you know, there are provisions out there that we can look at. And so I want to bring that up.
Or let's just answer this one last question and then we're going to call it. The FTE count, must it match 2019, Mark? Isn't it you can choose February 15th to June 30th, 2019? Or
Yes. Yeah, you've
something
got
that's
several
like-
different periods.
okay, so what's the other period? Isn't it January to February? Like
Yeah,
January
it's
1,
January
February
1st,
29th?
2020 to February 29th, 2020.
Okay. All right. Well, that is the last question. I hope everybody enjoyed it. And again, sorry it was so choppy. Just like I'm getting emails from like, hey, this thing just came out and we want to make sure that we give you accurate information.
Yes.
So thanks everybody and have a good day, and everybody go work on your FTEs now. Bye, Mark. Bye, Monica.
All right. See y'all. Bye-bye.
Bye.